Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, April 14th. As I mentioned, indicated yesterday, we do got a bit more economic news releases scheduled for today as well as the rest of this week, as yesterday was our lone day of a breather, I guess, before we hit the data here. So we're going to jump right into it. We'll start off with the retail sales for the month of March. So we had a bunch of months where they were negative, and as you see, February was no exception with a negative 0.5%. Now, the forecast was supposed to call for a 1.1% increase in the month of March, and it went up to 0.9%. Now, if you exclude autos, the big ticket items, we had basically a flat line back in February for retail sales, and the increase or projection was at 0.7% and only went up to 0.4%. So, not as it was increased, but unfortunately not near the to the forecast that we had hoped. Producer price index for the month of March. This is the inflationary numbers for the wholesale side of things. Now, we do like to watch this because it's not it's a good gauge as to where inflation may go, but it's not the most important thing, primarily because we look more at consumers. Even though costs sometimes rise on wholesale side of things, it doesn't always get passed on to consumers, which is why it doesn't have as big of a weight category in terms of how it affects the market. We had 4 months of negative decreases for the producer price index, and up to February. Forecast for March is supposed to go up to 0.3%, and it went up 0.2%. Same thing with the core. When you strip out food and energy, the core also was up at 2.2%. Now we have the NFIB small business. This is the confidence level of small business out there, which is important primarily because they do represent the most jobs out there in the U.S. here. So back in February we had 98 on the index level, and it dropped down to 95.2. So not feeling as rosy as they did last month. So something to kind of consider and watch and make sure that they are still feeling pretty comfortable, primarily because that they represent jobs. Business inventories for the month of February. So January, a flat line, and it was supposed to increase at 0.3, and it came in at expectation. So businesses are increasing their inventories as they project a little bit more business going ahead. Stock market is currently down. There's mixed earnings reports, so that in conjunction with the mixed bags of what we kind of saw with the data, the stock market is currently down. That's good news for the bond market. As you can see here, we saw a big spike here in the bond market, which represents improvement in the interest rate. So a nice little jump here for us in terms of pricing for interest rates. So, hey, thanks again for watching. I hope you guys have a wonderful day. We'll look forward to see you guys tomorrow. And good news is we got improvement in interest rates. Take care. Bye-bye.